Hi there, I'm Kavita Bartake from Cherry Street Investments. Today I want to talk to you about using your retirement accounts for investments. So a lot of people look at real estate investments and say, and I had an investor come up to you yesterday and tell me that, hey, I like the investment, I like the returns from the investment, but I think it's too strict and I have to hold it for 3 to 5 years. And sometimes I might need funds after 2 years. How can I liquidate that asset? Or how can I get my investment back? It's a little difficult, but it's not impossible to do. You can always set up an LLC and invest as an LLC, and you could add someone else into the LLC and buy them, have them buy you out if it's necessary. So that's one way of doing it. But another way of doing it where you don't really need the liquidity is using a retirement account. And why is it so important? Because most of the times when I talk to investors, I find that their retirement accounts are very underinvested, meaning they may be making 3 or 4%. Some of them haven't invested at all and they left it in money market. Some of them invest in the market, it's a stock market, and it sort of goes through the ups and downs of the stock market. Some of them invest in a retire in 20, I don't know, 38 fund, which they have no idea what it's being invested into or what it's making. So it's very important to realize that retirement is a huge source of funds that you can use for yourself to invest into real estate. And generally, if you're with an employer and they have a 401k and it's not readily accessible, usually when you leave an employer, you can actually move that 401k to an IRA or a QRP. And I highly recommend QRP over IRA. And that'll be another video I'll do sometime talking about why QRP is a better investment approach than using an IRA. But coming back to the point, so when you're investing with a retirement account, you don't really need the liquidity, assuming you're not 59 and a half years yet and you can't really access those funds anyway. And that makes a perfect marriage with real estate, because now your money is growing 15 to 17% year to year, and 5 years hold is not a big deal because you're really not investing that anywhere else or using that money immediately or don't have any need to use that cash. So that's a little bit about why you should use retirement accounts. And if you have any questions, feel free to contact me, Kavita, Kavitha, at cherrystreetinvestments.com. I'm happy to answer any questions, or you have any comments about this video, feel free to leave it for me. Thank you so much. Bye.